Property we bought, which is actually going to be our first property on our syndication platform,
Hmm.
prior owner paid 18.4 million for it. The prior owner before that paid a little less than 20 million for it. We picked it up for 9.5 million,
Wow.
70% occupied. So, on a 5-year hold, you're talking about a 2.3 equity multiple. Conservative underwriting puts it at a little over a 20 IRR deal level.
Hi, everybody. Jose Luis Morales here. Welcome back. Today we have Stuart Keller from Miami, Florida. And today he is going to be educating us on how to invest in senior living communities. Now, this is a topic that I've been wanting to learn about for a long time, so I'm excited to have Stuart. In the senior living community, we are going to be going over independent living, assisted living, and memory care. And welcome to the show, Stuart. How are you?
I'm doing great, Jose. Very happy to be here. Thank you for, having me on your show.
Now, for our viewers that don't know who you are, if you wouldn't mind just kind of giving a brief introduction, like who is Stuart Keller and how did you get involved in this wonderful world of investing in senior living communities?
Yeah, so really, I mean, kind of at a high level,
Mhm.
career started out doing asset management, acquisitions, and underwriting for basically all asset types. It
Mhm.
was in 2010, a lot of REO stuff. Worked for about 3.5 years for a smaller boutique private equity shop. Moved over into operations on the multifamily side
Mhm.
as a regional manager, and then oversaw portfolios as a regional vice president. And then when I joined Lloyd Jones a little over 3 years ago, it was initially to be on their management side to oversee the management portfolio of about 7,000 units. About 4 months into that, I was actually tasked with building out and really solidifying our asset management platform. So I did
Mhm.
that for about 2.5 years. Really learned all the nuts and bolts and all there was on the financial side, in addition to the operations side. And then about 90 days ago, little almost 4 months ago, got tasked with building out a syndication platform,
Mhm.
which will allow through Reg D 506C offerings accredited investors to invest into our senior living properties, which we've actually been buying all cash off the balance sheet and then recapitalizing them via syndication or JV partnerships.
Now, for our viewers, like let's say somebody's been wanting to get into senior living communities, like what would you say is like the first step? Like, where would I go and maybe find a senior living community? Do I just go like on LoopNet, on Crexy, on CoStar? What is the best way to kind of find some of these opportunities? And once I find it, like, what do I look for?
Yeah, so having or partnering with somebody that's been doing senior living and
Hmm.
understands the underwriting, what differentiates the senior living underwriting versus say a multifamily. There's a lot of symmetries and a lot of overlap. The one thing that you really start to identify as the fundamental differences is senior living communities have staffing requirements and staffing ratios. So finding effective operators that have done it are critical. Multifamily, you're dealing with, some amenities here and there. You're dealing with people's apartments. They might lease the apartment after looking at it online.
Hmm.
When you go into a senior living community, you're talking about somebody's, care.
Yeah.
There's meals, you have to provide, they live there 24/7. On the assisted living and the independent living, there's quite a bit more latitude, but there are still supportive care requirements as outlined by each state. So first off, knowing the state requirements on what that care looks like will help you understand the financial underwriting components of it. And then the other really big delineation between multifamily and senior living is leasing an apartment multifamily. You might text, you might call, sign up pretty easily.
Hmm.
For a senior living community, you're dealing with the sons, the daughters, and the family members of the resident, and you're talking about on average maybe 10 to 12 interactions with any one resident, or the family of a resident. So it's a much more personal, I guess, development and relationship in getting those residents moved in. It's obviously going to be a major life move. They might be selling their house. So, from an underwriting standpoint, being able to say, okay, is this model credible? If they have month one moving in 5 residents on a 90 unit property, you just throw that right out the window. Unless, of
Yeah.
course, like they've already confirmed their move in, they're already on track, they've already paid all their fees. The lease up process is much lower, but the returns and the path to get there, I think, is what's really driving the market. And what's really we're on kind of the leading edge of just an absolute housing crisis when it comes to senior living. And that's why we're kind of going in feet first, like all in on the senior living side. So, back to your original question, I would say it's really about relationships,
Hmm.
and it's being able to partner with sponsors that have done this in the past to be able to be awarded a deal.
It's funny because I agree with you 100% that it's a growing area because obviously we've got so many baby boomers every day reaching an age where they're retiring or need additional care. It sounds like the underwriting is dependent on whether it's independent living. The numbers would be different if it was independent. It would be different if it was assisted living, and it would be different if it was memory care because obviously there's different ratios that you have to look for because they're all going to require a different level of care. So it's not just like your standard. It also sounds like some of the challenges might be like as opposed to an apartment complex is going to be finding the right people to operate these types of buildings that understand how it basically works. So unlike an apartment where maybe you have an on-site property manager, over here you've got different people that are responsible for a lot more things than just like your average person. So are there any ratios? Like I know in multifamily, like usually I take the gross rents, I can say 50% expense ratio, just depending 40% to 60% expense ratio, just kind of depending on where you're at. And then that gives you like the NOI. Then you obviously give it a cap rate. Are there any rules of thumbs like that for kind of for the senior living communities or any special ratios like, okay, staffing is about 30% of the gross rents or anything like that that our viewers would be able to benefit from?
Yeah, so when it comes down to that, the unit allocation at the property is really going to drive a lot of the underwriting. One
Mm,
thing that is heavily focused on in senior living that is maybe lightly touched on in multifamily is your operating margin.
mhm,
Because, that so say on a 100 unit property, it's all assisted living.
mhm.
And this is just kind of hypothetical, but if you've got a nursing care relative to the number of residents, it might be 5 to 1, 5 residents for every one full-time nurse or somebody. You get that one extra unit from 80 units to 81 units, you have to bring on another full-time person, so your operating margin is going to go down. So you're actually going to be losing money by getting the one more resident. Now, the way to optimize this is figuring out and identifying properties that have a good, ratio of IL, AL, and memory care. Or maybe it's just all IL, or maybe it's just all AL. But typically, when you're identifying an asset, having a mix is gonna allow you to retain those residents for continuance of care. So you might have some residents that are IL that maybe they've developed some cognitive, you know, deficiencies. Maybe they're going to be moved over into the the AL portion. Now their rents are going to go up, the level of care is going to go up, and then your operating expenses are going to go up, but it's going to be able to provide that continuity. Then you're going to go from an assisted living to a memory care. So, somebody who enters assisted living might be doing really well, but only showing minor signs of cognitive decline. And then after a year of living there, they'd be moved over to the memory care facility.
I
So,
love that. It's funny. It kind of reminds me like when you're buying apartment complex of having a good unit mix. Like
Yes.
I own an apartment complex, and what I like about it is that most of them are 2 bedrooms, and there's some 1 bedrooms, and then we're adding some 3 bedrooms. But that allows our 2 bedroom tenants to eventually move up to a 3 bedroom, or 1 bedroom tenants to move out to a 2 bedroom, and essentially it allows us to kind of retain them. And that's kind of what I thought for a long time. Like when this topic would come up, I thought it was like specifically we specialize in memory care, or we specialize in assisted living or independent living. Now, for those viewers that maybe don't understand what the difference is between independent living, assisted living, and memory care, do you mind explaining what the key differences in those three different classes are?
Absolutely. Yeah. So it really starts out with, at the very forefront being age restricted. So it's going
Mm-hmm.
to be your 55 plus communities, in some instances, it might be 65 plus. I've only seen one 65 plus, and that was due to
Mm-hmm.
a HUD loan on the deal. 55 plus, it's just going to be a lot of great amenities. Your only restriction into living there is obviously your age. From an underwriting standpoint, your average length of stay on an age restricted community is going to be 7 years. You're going to see 20% turnover, and you're going to see rents that are anywhere from 20 to 30% above your multifamily properties. So getting into the age restricted space is obviously very profitable. Next up is going to be your independent living, very similar to an age restricted. However, the difference is going to be higher rents because you're also going to be providing meal services. There's also going to be, typically you're going to find salons, a barber shop, different amenities on the property that you wouldn't find on an age restricted community. So the amenity mix and the volume of activities is going to be much higher on an
Mm-hmm.
IL. And then as soon as you start to get into the assisted living, that's where you're going to start to see nurses, medication being dispersed. You're going to have, different, many more different levels of services. Typically, you'll have a bus so you can actually take your residents into town, take them shopping, be able to provide much, much greater level of care than if they were to just stay at home and have to have a full time nurse. Assisted living, you're also going to get the companionship, which is also critical in helping offset further cognitive decline. And then lastly is going to be memory care. Again, it's going to be the most expensive before you get to like a skilled nursing facility, which is really the most technical. But memory care, typically you're going to have RFID door locks, so you're able to lock the residents in the room. Typically, these properties, this section of the property is going to have key access only. The residents will have an ability to interact with each other, but
Mm-hmm.
it's going to be very confined, even in the outdoor spaces, to be able to prevent the residents from wandering off.
And then what's like the price differences? Obviously, this is going to be depending on area. It's going to be dependent on like the level of amenities. But what would you say would be like some of like maybe like the price differences between like independent living, assisted living, and memory care? I've heard clients tell me that like that it costs like $10,000-$20,000 a month in rent or something like that.
Yeah, so just typically, and what I'm about to describe is just kind of a baseline delta between the different levels.
Mm-hmm.
Obviously, it's going to vary pretty significantly by market. Typically for an age restricted in today's market, a 1 bedroom, 1 bath will be $1,500 if the multifamily properties are 1,200. Going into independent living, it'll go from the 1,500 to probably 2,500 to 2,750 because you're also getting all your meals paid for, different, much better amenities. And then when you go from IL to assisted living, your rents are probably going to go from the 2,750 or 2,500 to probably almost 3,500 or 4,000. And then your memory care, given the unique aspect and the other professionals that you have to employ, you're probably talking anywhere from 5,000 plus per month. The average length of stay at each one of these communities is going to be about 2 to 2.5 years. prior to moving on to their next level of care.
And does it typically happen where as they get older, they usually move up basically from independent living to assisted and then to memory care? Is that typically like 2.5 years typically before they kind of transition to the other places basically?
Yeah, so typically in like assisted living, they're either gonna, live there,
Or
for the
pass
rest
away?
of their but
Yeah.
for the rest of their lives, or they would transition over to memory care or to skilled nursing. But typically, on average, we're seeing the average resident stay of a little over 2 years.
And then how did you get involved in your first like senior living community? And did you buy the first one? Did you build it or did you like maybe take like some other type of asset and like turn it into senior living? If you wouldn't mind kind of sharing that with us, I think that would be kind of interesting if maybe you had like a example of one.
So, this is actually a really good opportunity to kind of highlight why we're doing senior living is,
Hmm.
you know, there's obviously demand for it. We talked about it briefly before the call, but the underlying metrics is what they call the silver tsunami. So 10,000 baby boomers started turning 65 every day in 2019. The leading edge of those baby boomers started turning 75 in 2022. Okay. Now, as these baby boomers start to shift, and we're really starting to see all the baby boomers really start to turn 75. By 2030, based on our current construction deliveries of anywhere from 40 to 50,000 units per year, if 1 in 5 individuals over the age of 75 choose to live in or need to live in, whether in IL, AL, or memory care, there's going to be anywhere from 1 million to 1.5 million unit shortfall by 2030.
That's
So
crazy.
when I tell you the crisis is going to happen, like I've done all of the research, pulling the actual statistics and the deliveries from various resources,
Hmm.
including Statista online, where they'll actually go out and give you like the quarterly results of all of the different deliveries. You're talking about a huge, massive shortfall in terms of available housing. Not only that, when you get this significant shortfall, you're like, oh, well, developers are going to start building more units, right? Well, that's true. However, between the COVID delays, the construction delays, the supply chain issues, that's actually dropped the number of new units under construction to an all-time low. So, coupled with the fact that the units that are being built are all in the five major Sunbelt markets, and they're all geared towards the top 10 or 20% of income earners. The middle market is being fundamentally ignored when it comes to what we're going to be able to do for them as they age. And that's why we've really gotten into it. This year, at the beginning of the year, actually marked our first two acquisitions into senior living. Both were, core plus deals. One in Lincoln, Nebraska, and one in Minneapolis. They were both and continue to be performing assets, and it was really just a plug and play in terms of the acquisition. As far as cap rates are concerned, going in cap rates year one, pro forma cap rates with very conservative underwriting, you're talking high single digits. Now, the last time we had high single digits in multifamily, 2010, 2012,
Yeah.
and then really, just kind of went absolutely bonkers for the past few years, and now we're starting to see kind of prices abate right now. But right now, there's just people don't know enough about senior living to make a really cognitive positive decision about investing in it. But from a supply and demand, the basic economics are there.
Yeah, not only that, in our area, I've kind of seen like I can't think of the name off the top of my head, but there's three one company that just built three brand new construction senior living. I think one of them for sure is Memory Care,
Yep.
and I see obviously the trend. It's almost like the perfect storm, basically, for being involved in the senior living community because there's so many baby boomers transitioning. What would you say like occupancy rates are for like something that's already built and something that you're buying basically already running? Are those typically like 100% occupied because of the huge demand that there are? Could you expect like 80% occupancy? What is typical? Does it vary by area? What would you say like occupancy rates? And then we can talk about converting hotels or converting some of these other asset classes into senior living as well too.
Yes. So, great question. So, obviously, the occupancy is going to vary by market.
Mhm.
So, what we do from an underwriting standpoint is we go into different platforms that will actually tell you the demand forecast and the existing demand of, number of people seeking an independent living versus the available supply. And typically, what we've been finding, even in like smaller markets in Valparaiso, Indiana, there's 60 more people seeking an independent living unit than what's currently offered in the market. So occupancy rates, or actually what they really refer to them in senior living as census rates, COVID has had a huge detrimental impact on the occupancy rates. It was very impactful. What you're seeing right now is those occupancy rates starting to rebound. On the flip side of that, a lot of the major institutions in the REITs were actually owners of these senior living properties. There was a big push in 2019. Now that you're hitting the 3-year mark of those REIT holds, they're actually looking to offload. So, a property we bought, which is actually be our first property on our syndication platform,
Mhm.
prior owner paid 18.4 million for it. The prior owner before that paid a little less than 20 million for it. We picked it up for 9.5 million,
Wow.
70% occupied. So, on a 5-year hold, you're talking about a 2.3 equity multiple. Conservative underwriting puts it at a little over a 20 IRR deal level, and an average yield of the 5-year hold, even discounting the fact that year one is going to be zero, you're talking almost a 10% yield on your money. So, from that standpoint, you're we're buying deals right now that are kind of still recovering from COVID as far as like the occupancy lease up. And then we're, just leasing them up and trying to maintain anywhere from, I think our underwriting guidelines is like 90% occupancy.
So it sounds like the some of the assisted living or the senior living communities, the leasing up of the units, it sounds like that was delayed because a lot of people didn't want to make moves during the pandemic. At least that's what it sounds like. So obviously there's opportunity there.
Properties were shut down, meaning there was no new residents allowed, like during the
Wow.
pandemic. Like they just weren't taking move-ins. So from that standpoint, another deal that we have on Crowd Street that just launched today. We actually did our webinar today. When we started underwriting the deal, this is very kind of indicative of the market in general. We started underwriting the deal when the property was at 75% occupancy. Now, 3 months after we started the underwriting, property's at 85% occupancy. Our pro forma year one only has it at 89%. So from a gross income perspective, we're already going to be surpassing our underwriting before we even own the asset.
That's wonderful, man. Who typically pays for the rent? Like, is it typically like the tenant? Is there any government assistance as well too? Because that would almost even make it more stable of an asset as well too. If there's like any government assistance, how does that typically work?
Yeah, so typically, it's definitely a blend of both. When you're looking at kind of who's going to be paying the bills, a lot of baby boomers are going to use the equity in their homes if they do need to move away from their home. You're also going to look at income qualified. So
Mhm.
if they're getting 401k, if they're getting different retirement accounts, you'll actually look at what amount of money they're going to get each year, and then you base your underwriting around that. So typically, when you look at these underwriting and the analysis,
Mhm.
you'll see, hey, there's 100 resident or a hundred individuals within a 1 mile radius that are 75 plus, that are income qualified of 50,000 plus per year. So that 50,000 plus becomes how much rent they're able to afford. So there is also government assistance. There is co-pays and all that other stuff. I'm not super familiar with how that's structured. Typically, most of our properties are private pay.
Now, if this is not too personal, like I know that, and this kind of reminds me like of storage units, like you can do research as to like how much demand there is, and you can do research as to how many basically storage facilities are 100% occupancy, 90% occupancy, which kind of tells you there's also ratios as well too. Are there certain websites that people can go to? And if so, what are the websites where people can kind of go and do a little bit of their own research as to what the actual demand is for a specific area, and what is the current supply as well too?
Yeah, yeah. I mean, so I would say it's going to be a combination of two things. First up is going to be NICMAP. That's NICMAP. It is a subscription-based service, but that's basically the co-star of the senior living world. Now, what you can also do to be able to drill into, you know, the market a bit more is actually look up the property on CoStar, which I've actually started doing because it'll give you the basic data points, but it's much more economic focused on CoStar than NICMAP is, where NICMAP is going to give you really granular information on,
Hmm.
unmet IL, AL memory care demand, as well as
Hmm.
the supply forecast and the, comp analysis.
And then why is it that, and this has kind of just popped up, why is it that you were able to pick up a deal that sold for 18.4 million, then 20 million? Like, why is it that you were able to pick it up at 9.5, which is like 50% of that? Like, obviously it depends when they sold at those prices, but it seems like a smoking deal.
It is. So what we're seeing is, these REITs have X amount of their portfolio in senior living. These senior living deals just haven't been cash flowing, and the way the REIT is valued is based off the cash flow from operations to drive the REIT value. So as their balance sheet gets depleted with the negative income from an underperforming property like the one we have in Valparaiso, Indiana, they're okay selling it at a loss because ultimately on a net it's going to boost their REIT valuation. So they bought it in 18 they bought it in 2019 for 18 or 16.4 million. The prior owners had paid like 19 million or 18 and a half or something. So yeah, buying it for below replacement cost is
Hmm.
huge.
Big time.
We are paying all cash, so which is makes closing substantially easier, or we're doing a combination of balance sheet equity and debt.
What about like it sounds like on Nick Map you can actually find properties for sale, or where can I actually, like, what websites can I look for these types of properties for sale? Is it that website? Is it CoStar? Is it a combination of all of them? Is there like a hub like that, like generally you can look for properties, and then obviously the underwriting is going to be different?
Yeah, so a lot of it is going to actually just come down to broker relationships, different sort of e-blasts from brokers. Few deals that we're actually getting awarded to us just come from off-market deals, building the relationships with the brokers. I would definitely recommend that.
And then how would you find brokers that specialize in senior living communities, or are they just receiving them because they obviously are commercial brokers?
Yeah, I would just start off with like the big five, going to Berkadia, Marcus and Millichap, Cushman and Wakefield, Jones or JLL, being able to go and just start, reach out to them, ask them, and start cultivating those relationships. There is going to be a little bit higher barriers to entry in terms of getting into the senior living space. So that's why I think if you're really truly interested in doing it, um, I would really recommend finding a sponsor that you can partner with.
Hmm.
If you're bringing LP or co-GP equity, or even participating in the syndication.
Are there any rules of thumb, like as it relates to price per door or price per unit, that you guys are, or like for your guys' buy box, like is there any rules of thumb that you guys typically look for? Like I know in my area for apartment complexes, anything under 200,000 a door is a smoking deal.
Yeah,
In our area, like I bought an apartment complex at 178 a door, and then I bought one at 156 a door. And the moment I saw them, I'm like, man, this is below replacement cost. Like this is like
yeah.
I'm not going to see something like this again. Obviously, it also varies based on independent living, assisted living, or memory care. Are there any rules of thumb that you guys typically look at as it relates to price per unit?
I mean, typically we want to see what the available pipeline looks like. We don't want to buy in a place that's going to have huge supply pipeline, right
Hmm.
around the corner. We look at, is it below replacement cost? Going and buying a brand new asset right now isn't really going to make for a successful investment. If
Hmm.
you're overpaying in a market like we're in, especially on the debt side. But I mean, as far as the price per door, we are looking at a lot of opportunistic opportunities that have a strong management play to be able to create that value from day one.
As it relates to, it sounds like right now there's potential opportunity with just buying existing ones. What if in your area there isn't like existing available ones? Would you guys ever do ground up construction? Or are there certain conversions that you guys are looking for? I know off camera you kind of mentioned to me like hotel conversions. And as soon as you said that, like my eyes lit up and I'm like, because hotels are one of the areas with, there's just a lot of changes with hotels right now with like
Yeah.
Airbnb and obviously COVID, where people aren't maybe as big of fans as hotels, but they could be obviously potential good senior living facilities because they have similar amenities like pools, a kitchen already, and just different things. So, can you kind of walk us through like the benefits of buying versus maybe building, or even taking like a hotel and turning it into a senior living community?
Yeah, so on the hotel conversion front, we are actually converting. We're identifying hotels that are typically one building, so you're not going to have this campus of five, six, seven different buildings. They're all elevated, and you're also going to start to get the ballroom, the common area for the cafeteria,
Hmm.
different amenities, and the full commercial kitchen, which is going to be critical. Now, from a redevelopment standpoint, you really have to go into each unit and make sure that it's outfitted properly for somebody to actually live there, as opposed to a 1 or 2 night overnight stay. So identifying hotel opportunities, we were actually awarded a hotel in Texas, I think late last week. So I believe the play there is to convert that to a senior living property. We are, and we have, we've developed ground up over the past 40 years, a little over $1 billion in ground up construction. We are actively building a new property in Port St. Lucie. I think it's going to be about 110 or 120 independent living units. But again, going ground up right now with the supply chain issues and the different kind of moving characteristics, if you're not able to get your rates locked in, there's just quite a bit of
Risk.
uncertainty as far. Yeah, exactly.
What would I look for? Like, I know that you said one building. What's the benefit of having one building in a hotel versus multiple? And then what else would I look for if I am considering doing a hotel? Does the showers handicap accessible, anything like that, or if it has a certain type of plumbing or electrical? Does any of that play a factor if I was thinking about doing a hotel conversion?
Yeah, you want to make sure that there are little kitchenettes in the
Hmm.
units. So just going into a normal hotel room that, maybe just has a mini fridge is going to require a lot more work than going into an extended stay that already has the kitchenette built in, that has the large, handicap accessible shower. And if it doesn't, you would need, if it is going to be an assisted living building, you would need that built out. So your turn costs are going to be a bit heavier as opposed to a typical interior renovation on an apartment. First up, definitely needs to be elevated.
Hmm.
Secondly, take a look at the market and the submarket. There needs to be easy access to shopping nearby. There needs to be easy access to hospitals for that continuance of care. So when the doctors, nurses, and who they're interacting with on a regular basis is crucial. If you're getting a different nurse every time and you're having to explain your symptoms over and over and over, and there's not that continuance from one day to the next, it's going to drive a lot of frustration, and you're probably not going to get a lot of move-ins if you were to find a hotel and convert it that's within 1 or 2 miles of a major hospital.
And then why is a kitchenette important?
Typically in IL and AL units, they're going to want to be able to heat up some food.
Okay.
We are providing 3 meals a day. There is going to be snacks available, but residents' families will come visit them, go in their rooms, bring them food. They're still very much able to provide for themselves, with the exception of the obviously assisted living component that they would require.
What about, like, let's say that I buy something at a 70% occupancy ratio, and let's say that my goal is to get it to a 90% occupancy ratio. I know how to market for apartment complexes because I own them, but how would I market for senior living potential candidates, like either for independent living, assisted living, and memory care? Do I build relationships with doctors? Do I build relationships with hospitals? What's some of the strategies that you can utilize to rent up the buildings to get them to a accurate occupancy?
Yeah, so I mean, so each of these properties is going to have their own director of sales, and then depending upon the size, you might also have your own person in charge of marketing that's actually on the property, not a corporate support position. So you would have both actually on the property. Staffing is obviously going to be much heavier on these properties, but as far as being able to effectively lease up, it's going to be able to you know advertise on Google. Google SEO is going to be optimal. And then going out into the community and finding out, maybe you go over to another, if you're an AL, going and building a relationship with the IL property nearby. So it's really just creating that brand awareness that's going to be crucial.
Okay, so let's talk about the staffing. Obviously, like in an apartment complex, you have like a property manager that kind of does different things. Like, what does a typical team look like for a senior living community? Let's imagine that I'm basically built one, and now I need to staff it. Like, what's the right team? What are the different people that are involved? Like a chef, like a
Yeah, you will have line cooks, you will have a chef, you will have an executive director, a business or an office manager, a sales team, a director of sales and marketing, a head nurse, typically a head of an activities director, the various nurses based on your staffing ratios. The nurses are going to be there 24/7. So you're not just paying somebody to be there 8 hours a day, you're paying 24 hours a day. So it's really all going to be driven by what state you're in, how many units, and what that unit mix is.
Yeah. And what would be the role like of an executive director? And like you said, I think a sales and marketing director as well too, right?
Yeah.
What are some of their roles? Like what would like if like is the executive director the main person in charge or
Yes. So the executive director or the ED is going to be very similar to like the property manager, but she's going to oversee your director of nursing, director of sales, director of activities. So the level of responsibility is going to be materially more than a regular property manager. So they're going to have to understand medications, resident checkups. Have they deteriorated, cognitively? How is their health? Being able to keep track and monitor all that is going to be crucial.
now in let's say I wanted to staff like a brand new senior living community, like how would I go about that process? Like do I go like on LinkedIn? How do I find people that are capable, or are there any tips that you guys would give as it relates to doing that? Obviously, I think the ideal situation would be finding somebody that already has a very similar position or even that position
Yeah.
already, because it is pretty niche and pretty granular. Anything else, any tips or tricks as it relates to that? Because I imagine this is probably the most critical part of not the most, but one of the most critical parts is having the right team. That way it can be as hands off for you guys as possible.
Yeah, so we have we're vertically integrated with our own operations platform. I mean, as far as somebody coming in, they would have to start off by understanding what licenses to get. Are you going to be assuming the existing licenses in place, and then even structuring the on the legal side from the formation? Typically, there's the propco, and then there's the opco. The propco is going to have um, the actual on-site, the teams. The opco is going to hold the licenses, and a lot of the risk, and there's going to be different agreements between the propco and the opco. Now, when we syndicate equity on these deals, we're actually syndicating it out of the propco side, so there's less exposure from the investor and the licenses, because those licenses are being held in the opco side. As far as staffing is concerned, I mean, it's really going to be crucial to, as unless of course you're buying 10 of these deals at once. I would really recommend hiring a management company to do it, um, partly because of all the nuances and just such the massive overhead in running these properties, that if you have one deal, the amount of back office support you're going to have is going to be really, you know counterproductive into
Mhm.
your overall operations and your investment.
How do you go about financing these deals? Like, are there special lenders that finance senior living communities? And if so, if you would be open to kind of sharing maybe some of the different lenders that kind of specialize, because I imagine that it's a little bit of a niche. And what are some of the like the different like terms? Like I know like for apartment complexes, sometimes you get amortized over 25 years or even 30 and then due in 10, like a balloon payment in 10. What could somebody expect when financing some of these deals?
Yeah, so typically, I mean, you're going to get, depending upon the type of play it is, if it's just a regular light value add deal, you're talking, 60 to 65% leverage. A
Mhm.
lot of the properties we're buying right now, we are doing bridge debt and then looking at going perm in, 1 to 2 years.
Mhm.
Obviously, rates right now are a little bit unpredictable, so understanding the kind of forward curve on the yield is going to be crucial. But from that standpoint, a lot of lenders will offer senior living financing. They will underwrite it a bit differently than multifamily, but
Mhm.
the terms itself are pretty symmetrical.
What is the difference between a senior living and a nursing home? Are they basically the same thing, just different names, or are they different?
So what's funny that you asked me that is, my wife the other day was like, "Well, you're saying senior living, but don't you just mean nursing home?" And it kind of goes back into the different levels of care. So you've got
Uh-huh.
the IL, the AL, the memory care, and then you've got skilled nursing. The skilled nursing is going to be the most robust, the most critical in nature. Um, that I would compare to a nursing home. We're going to have around the clock care, for deteriorating health. Whereas, AL and memory, IL, AL and memory care is just going to be considered a senior housing community.
And then obviously it sounds like an amazing opportunity, and it sounds like obviously there's a lot of opportunity. What are some of the things that could go wrong when obviously investing in some of these senior living communities? What are some of the risk associated? What are some of the maybe mismanagement issues that people should look out for? What are some of the mistakes that you've kind of seen in the industry?
So, I mean, just right off the bat, I mean, what could go wrong is, another pandemic.
No, 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 no.
Being able to effectively stress test the financials prior to acquisition, I think, is going to be
Mhm.
first. Other things that could potentially go wrong, or really kind of like hot buttons to look out for, is, each property is going to be licensed to do X. You're going to be licensed to do independent living.
Mhm.
Now, if you start providing and hiring care for assisted living, but you don't have that license, there's going to be huge exposure. Buying a independent living unit or even an age restricted, and you're seeing the levels of care continue to increase, you're going to be caught, pretty heavy handed with that. And then those residents would all have to either be moved out or transitioned. So not only are you going to get hit on the revenue side, you're going to get hit on the reputation side when you have to call up the family and say, hey, your grandma isn't allowed to live here anymore. She has to be moved to a facility that's going to be $3,000 more per month. You're going to get a lot of bad reputation, and then revenue's also going to drop. So I would say those are probably the two biggest things: is making sure that your levels of care reflect what you're licensed for.
Mhm.
Um, and then just as far as kind of the externalities would be obviously another pandemic. I mean, that would suck.
So it sounds like there's different licenses available for independent living, for assisted living, and memory care. Do you
Yeah.
mind me asking? I think you might have covered it briefly. Like, what are some of the different licenses for independent living, assisted living, or even memory care that would be required? And it sounds like that would vary by state as well.
Yeah, so I mean, all those licenses are gonna, be very state driven, and the state will actually update them each year.
Perfect.
So whether it's going to be impactful to you or not, kind of remains to be unseen.
Yeah.
Which I think is also probably one of the other risk factors is
Hmm.
really understanding how often the state updates their licensing requirements.
Hmm.
Is it once? Is it once a year? Is it once every 5 years? Um, you know, and then really understanding historically what have been the impacts or the changes once those licenses or those requirements get changed.
What about insurance for a building like this? Like, is that more expensive than an apartment complex, I would imagine? And is there like a certain percentage that maybe you can kind of guesstimate as to what insurance costs would be relative to like maybe like gross income? And who are maybe some of the providers for insurance?
Yeah, so this really boils back down into the propco and the opco side.
Hmm.
The opco, the operating company, is going to be susceptible to the licenses, and they're also going to have a certain risk threshold, and you're going to have to insure on the opco side. And then you're also going to have the propco side, which is actually just the physical building, and that's going to have its own standalone insurance. So there are certain insurance providers specifically for senior living. Our broker on that is, Sean Budney with Centria. He's actually out of Florida as well. They've been really effective at underwriting and providing policies for us
So what you're saying is that there's companies that could actually run the entire assisted living for you, basically.
on the insurance side. Yeah,
I love,
or management companies.
and the management companies could actually like, so I could buy like literally like a senior living community and then hire a management company to almost handle all of the operations as well.
Yes, yeah, that's probably the most advisable.
And are there certain companies that you know of that offer those types of services? And how would I go about finding the right company? Because I imagine that there's good management companies and there's also poor ones. Is there anything I should be looking for if I were to ever want to get into something like this, or even some of our viewers?
Yeah, so our company within Lloyd Jones, we actually have our vertically integrated operations platform called Aviva Senior Living, and we're also providing third party management services. And
I
with
love
that,
it.
we'll actually help you underwrite, secure the debt, and be able to handle the lease up for you if it is a ground up. We're third party managing several deals now. One is in Georgia. It's going to be I think it's about 120 units. We're overseeing the marketing, the ground up development, and the full operations piece of that as well.
And then I know property management costs for like an apartment building, and I keep referring back to that, are
Yep.
usually sometimes 6 to 10%, or in some cases lower, like 5, 4%. Are there any rules of thumb as it relates? Obviously, this is going to be a lot more work than an apartment complex. Are there any rules of thumb as what the standard for the industry range for management costs would be?
Yeah. So typically in the multifamily on the larger assets that we've done, we're seeing anywhere from 2.5 to 3%.
Which is
Now, when you
low.
go into when you go into the senior living space, you're getting anywhere from 5 to 6%, but your revenue is going to be 5 times that of multifamily.
100%.
So, monthly revenue on a 120 unit deal might be 650,000. So they're getting 5% of that. So the management fee is going to be critical. And then below the line, typically anywhere from a 50 basis point to 100 basis point asset management fee below the line.
What about tax benefits for a senior living community? I know for apartment complexes, there's bonus depreciation, self storage. I know hotels have pretty high depreciation as well too. Any tax benefits for investors? And maybe just to kind of finish it off, you can maybe talk about if somebody wanted to get maybe involved with investing in your company, how they should connect with you or how they should reach out to you guys as well too.
Yeah, so all of our deals, we are doing cost segregation studies.
Hmm.
So we're able to do the accelerated
Depreciation.
depreciation within the first year. Um, so from that standpoint, there's obviously going to be, nice tax savings for any and all of our investors.
Hmm.
As far as getting in touch, we are launching our syndication platform, which is open to accredited investors. I'd recommend going online to Lloyd Jones Investments, and that's just LLOYDJONES investments.com. You'll be able to put your information in there, and a member of our investor relations team will reach out and actually share with you any opportunities that we currently have available.
And then from a depreciation standpoint, what should an investor expect to receive? Like usually like in some syndications, it's like for every dollar you invest, you get 30, 50 cents on the dollar, some 75 cents on the dollar. I've seen some where it's 1 to 1. And then I've even seen some where it's like for every dollar you invest, you might get like $1.80 per every dollar. So in some cases, there's some different structures. Does senior living communities usually have higher depreciation than some of the other asset classes like apartments, or is it very just comparable to some of the other asset classes?
I mean, I would say it's going to be comparable to
Mhm.
multifamily. I would definitely have to do a little bit more research and
Okay.
speak with our tax accountant on that to be able to give you a better answer.
I love this interview, man. This was so good. I appreciate you doing this. Any final words or anything else that maybe some of our viewers should know? And I think if somebody wanted to get in contact with you, what's the best way to get in contact with you as well, too?
Yeah, so I mean, just kind of parting thoughts on it. Senior living is going to be big.
Hmm.
I would compare senior living to where multifamily was 10 or 12 years ago. I think we're all kicking ourselves for not buying every apartment complex, in 2010. So from that standpoint, I would recommend do your research, really understand it prior to, diving into it. And then as far as getting in touch with me, feel free to, reach out via our website, or you can send me an email. Just S Keller, the letter SKELLER at LloydJonesLLC.com.
Sounds great, man. Well, I have enjoyed this interview. I learned a lot about senior living communities and investing in them. For all of our viewers, if you have enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode would be helpful to somebody, make sure to hit that share button. Once again, my name is Jose Luis Morales. Today we had Stuart Keller. He talked to us about how to buy senior living communities, everything from ground up construction to redevelopment to taking over existing facilities. Thank you so much, Stuart. I appreciate your time and I look forward to staying in contact.